G'day everyone, welcome to this weekly update for the 16th of April, and it's been a pretty interesting week just gone, and we're going into a period in the latter half of April when there's a couple of key potential triggers that may determine the direction of the market in the short to the medium term. So we'll have a look at those particular charts today. Unfortunately, my data from overseas for Friday night has not updated as yet, so the charts for the S&P 500, gold, silver and the dollar index are not quite up to date, but I'll indicate where the actual closes were when we get to those charts. So first of all, just a reminder, this is general advice only, and you need to make your own trading decisions from this information. So just looking at the overnight action, the S&P did close higher, closed about 1321 on Friday night, and has completed a 38.2% retracement of the recent move off the lows down at 1240, which really on face value is indicating that we're probably now poised to move higher. The US dollar had a poor week again, and is really heading for 71, I believe. The Aussie indexes did retrace a little bit on Thursday and Friday, but should continue to push higher from here if the US does, and that's where the balance of probability sits at the moment. Gold moved to a new all-time high on Friday night. Silver also closing in on $43, so silver looking enormously strong. Copper was just down fractionally on the night, and is basically at the bottom of its short-term range. Oil was higher for the week, jumped another couple of dollars overnight, and I think Brent crude was back to about $123, $124 a barrel. And the Small Ordinaries Index is in correction mode, but the volumes really are extremely low, so I don't think there's really been a gross change of sentiment towards the small caps. I think it's just the prices have been dribbling down because the liquidity is just so low. It's not that there's many sellers, it's just that there's not many buyers in the market at the moment. So let's have a look at some of the charts. And so this is the dollar index. Dollar index was, as you can see, on the week we were considerably lower. I think we were reasonably flat overnight, so not a lot of change, but certainly down for the week on the dollar. And while the US dollar continues to slide, equity markets are typically going to rise. Now this is the S&P 500 up until Thursday night. You can see the retracement from the 16th of March to this top here, which is close enough to a double top. It's within 4 points. The 38.2% retracement was 1303, and the index declined to 1302.4 on Thursday night. It rebounded to around 1320 on Friday night, so it's about there. So you'd have to say with a retracement to 1303 and then a bounce 2 days higher, you'd have to say the probability is that this will break and move higher. It's not necessarily what will happen, and because of this very key decision by the Fed on the 27th of April, I really think from a strategy point of view it's prudent to not to be going too hard at the market at the moment. Let's have a look at gold. So this is gold on a weekly chart. So you can see we had a very strong week the week before. We had a dip in gold last week but closed on the highs. This is showing that gold closed at 1473, but in fact gold closed up at 1486 on Friday night. So gold very strong. So that's another new all-time high there. Silver also on a weekly chart. This is showing silver closing at 42.26, In fact, it closed at about 42.70, 42.75 from memory, getting up close to $43. It is very overbought in the short term, so we're not far away from a more significant correction in silver, I believe. So we could see a run to $44 or $45 the way the momentum is, but one would think that the odds would then favour a pullback in silver, perhaps down to this level around about the $37 to $38 mark is what I'm looking for. So let's have a look at our indices, and this is the ASX 200. So we had a really good run up. It got within 20 or 30 points of this 5,000 point high. We've had a little bit of a pullback over the last few days. The first retracement level at 47.86 is still about 70 points down, so I guess we'll probably go up a little bit on Monday, but we still could have another 70 points or so wash out on the Australian market. So let's look at the individual sector indices. This is the materials index on a weekly chart. So you can see this is really a pretty fair reversal signal, reversal pattern in the materials index last week. We did break to some new medium-term highs, but I wouldn't be surprised to see a little bit more weakness in the materials index. But it's still clearly an uptrend. Now, the banks are clearly not in uptrend, they're just going sideways, and the banks are at the top of their range at the moment, so there's a possible short sell for the banks there, and that'll be reported on in the members' daily alert. So that's finance index, and finally the strongest index is energy, which we had a very, very clear break of resistance a couple of weeks ago. We ran up very strongly in the energy sector during the week. We formed a high up here above 18,000 points, but in the end we had a bit of a reversal on the last couple of days, and we've come back to retest that level. With oil rising on Friday night, I would expect that this will probably start to head back up again. Okay, so looking at the overall strategy, we've got the Aussie dollar closing in on 106. Dipped a little bit during the week, but ended up pretty strong. So let's have a look at some of the others. Copper, there's the inventory level for copper continues to climb, which is really quite interesting. It's not really what I was expecting from the fundamental supply and demand data that I've seen, but yeah, copper continuing to build a little bit there, and as a result the price is really just plateauing, so it's trading around about the bottom of this range. Nickel, the inventory levels continue to fall, and as a consequence, although the price of nickel is just heading sideways, so the inventory levels are there's not a direct correlation with the actual commodity price. There is on a long-term basis, but on a short to medium-term basis, there are other drivers as well that are in there. This is the tin price over the last couple of years, and we moved up above $33,000 a tonne through the week, so it's more than doubled in the last or a little bit under 2 years. So the action summary then, I just think that given all the circumstances, we should just be easing back our exposure a little bit for the next couple of weeks until we can see what comes out of this Fed meeting on the 27th. We can see the market response to the remainder of the reporting season in the US, and I just don't feel that it's prudent, given those couple of circumstances, that we maintain close to 100% exposure. So I think just take the opportunity to maybe get out of a few stocks that are going sideways, as I indicated through the week, and probably just to ease off on buying new positions, and maybe get a couple of short positions in there as well, just to balance out your portfolio. Okay, so the strategy is still really, it's about quality resource projects and emerging projects, but they are going to be under pressure a little bit in the short term, so therefore you really just want to buy the dips. I think we'll give away buying breakouts just for the minute and look to just buy stocks that have pulled back a little in price. Energy stocks still the strongest sector, and still looking to short sell the retailers as well, although we haven't really had an opportunity there yet. So that's it for this week. The members update, the full chart update for all open positions and potentials will be coming out this weekend as well. So that's it for now. We'll talk to you next week. Cheers.